Assalamu alaikum, everybody. Hope you all are doing well. A very warm welcome to our distinguished speakers and all the participants who have joined from all over the region. This ESG online dialogue is about advancing human capital disclosure for sustainable value creation. I would like to introduce all of our distinguished speakers, starting from Mr. Rizwan Haroon, Additional Joint Director, SECP, Ms. Shapak Fazil Azam, Acting President and CEO, PICG, Syed Ehsan Ali Shah, KPMG National Head, ESG Regulatory Risk and CFO Advisory, Ms. Khurshid Kotwal, CEO, Asman International and Chair, ICAP Digital Board, Mr. Asad Hamid Khan, CEO, ACCA Pakistan, Ms. Sarwat Ehsan, Executive Director, CFA Society Pakistan, Mr. Aneeb Farooq, Senior Manager, AICPA and CIMA Pakistan, and of course, Mr. Zahid Mubarak, CEO, HR Metrics. Before we move forward, it's imperative to know why HR Metrics is heading the change on human capital disclosure. HR Metrics basically was the first company in Asia introducing HR metrics, data analytics, and transforming the approach from activity metrics to outcome metrics. And our CEO was the only HR professional from Asia to be invited to Washington, D.C., USA in 2011 to become part of ISO International HR Standards Committee 260, which has published over 30 plus standards till now, including ISO 30414, the first and only global standard on human capital disclosure, containing 58 metrics in 11 areas of HR. Our company has the honor to train and certify 1,000 plus number of consultants, auditors, practitioners, academicians in the world on ISO 30414, and we have certified 900 plus senior executives in Tokyo, Japan, in collaboration with our partner. HR Metrics also certified 2 corporations in Tokyo, Japan on human capital disclosure in collaboration with our partners. And if we talk about at national level, when Dr. Shamshad Akhtar chaired Pakistan Stock Exchange and Pakistan Institute of Corporate Governance, former finance minister, formed the ESG task force to develop ESG roadmap, our CEO Zahid Mubarak was invited to participate in the task force as the only HR representative. So having its foot embedded in the journey of transforming HR Metrics is basically set to bring the revolution within ESG disclosure, and we are hopeful and confident about it. With that, now I hand it over to Mr. Zahid to take this session forward. Thank you so much.
Brilliant. For the wonderful start, Isha. And once again, I would like to say thanks to all the distinguished speakers and valued participants. Our goal is to have a collective learning experience for everyone. And little more, I would like to talk about the company without going into more details. Right from the outset, we have focused on some of the niche area. Our goal is to equip the companies and the individuals with the global standards in a way that their skill set, their capability, their disclosure is globally portable. So in the first instance, we introduced the SHRM HR competency standard, which exists in 180 countries. It has been developed by 32 nations, more than 150,000 people around the world. They have this qualification. It's a called the passport for global mobility. It distinguishes the HR professionals from the generic professional to a competency-based professional because it has defined 9 behavioral and 14 technical competencies. DEI is another forte. I personally have been on the board of directors of the Center for Global Inclusion. In 2015, we introduced the global D&I benchmark standards in Pakistan. By now, 70 plus companies are using it. Likewise, the ISO 30414 Global Human Capital Disclosure Standard, to which I am personally an author. We have the honor to help companies on internationally and nationally as well. So today, our conversation is built around a domestic regulatory framework, which is called the ESG guidelines by the SECP, which have been published in 2023. And as these are the guidelines, not the mandatory requirements, and it's primarily meant for the listed companies, but it's clearly mentioned that any private organization can use it as long as they find it value added. Before going to the panel for a detailed conversation, I would like to share with you a little more context about this subject in a way that we would like to highlight the overall, the menu and our particular focus on the 14 metrics and what strategy we have in place to assist the organization in terms of acquiring and using the metrics beyond compliance in a way that they take it a more of a value-added activity. I would not like to go into those details because it's a very vast menu. So the SCCP guideline has got certain 11 metrics around the environment, 14 metrics around the social aspects, and the 11 metrics around the governance. So in total, there are 36 metrics spread into 3 areas. Now, there are important questions which I'm sure as a logical professional, it should come into the mind, and we are opening it as a dialogue. These are not questions for the panel, but these are food for thought for everyone who is taking part in this webinar. The first thing is to prioritize the ESG. Because commonly the ESG starts with the E, and in many cases, people think that's all about the environment. Well, my personal opinion, and an unbiased opinion, environment is very much important. But the question is that, is environment a issue a symptom or a driver? Who is polluting the environment? Who is degrading or consuming the water resources in an irresponsible way? Who is basically, disturbing the ecosystem in the planet? It's the human being, right? And if you see in a more broader perspective, the current threat to the sustainability of the organizations, particularly in the countries where these data sets are available, like in case of United States, one of the biggest interruption to the business sustainability currently is the reduced tenure of the people in the leadership role. If you look at the statistics from 2017 till 2024, there's a 34% reduction in the tenure of the people at the leadership level. And that disruption in the sustainability does not come from the environment. That comes from the violation of code of conduct, unethical practices, and in certain cases, certain wrongdoings. So I would call it the governance issue, because traditionally we use the word governance, corporate governance, which corporate is an entity, is driven by the human. So as long as an organization is able to take care of the governance aspect, and that is basically that originates from the social fabric of the organization. How do we treat the employees in our own organization? How do we treat workers in the value chain, the external workers? How we take care of the customers and our suppliers, and also the community in which we operate? That's the whole fabric of the S part of it. So are we able to prioritize this ESG, or we think that by looking at the carbon, emissions, water, we handle the ESG? That's a food for thought, right? The next thing, is our Chief Sustainability Officer equipped with the right competencies? Because over there also, if I look at the certain global researches, there's a question mark on the capability of the CSO, Chief Sustainability Officers. Since there are 3 terms, environment, so should the CSO have the capability in environment, or should it be competent with social side, or should it be a person with the governance capabilities? So the response, I think the neutral response to this question is that it has to be somebody who has a strong understanding of the corporate strategy, who can understand the organization value creation cycle, who can understand the entire chain and can link the organization KPIs with all the 3 aspects, 3 pillars of the ESG. So that negates the concept of having a technical expert, because technical expert would always be limited to one area. But still, I don't want to give any ruling on it. I would be open to any discussion, question, comments, not only by the panel, but even the distinguished senior members of this forum who can share their opinion that, what should be the capabilities and the competencies of the Chief Sustainability Officers, because by now the boards are framing the ESG ESG groups, ESG committees. So it's important. This is a key question. Third thing, this is a regulatory framework that we are talking is the ESG guidelines. And you understand the guidelines are different from the mandatory requirement. That means that organizations are not under the obligation to use each and every metric, and they have to prioritize the purpose of each metric with the purpose of the existence of the organization. That is where the true purpose-driven organization, that's the way the true purpose-driven organization should operate. So that means that laying down the priority between the metrics is important. And if we are not able to lay down the priority, if we consider everything is important, it means nothing is important. And the fourth component where we want to come in, we already have a expertise in this area, that's the data sets, data points. For example, if you're looking at the turnover, if you are looking at the pay equity of this, or the gender pay equity, CO, pay ratio, what is an acceptable range? What do you call good? What do you call passing marks? And how do you operate with respect to your peer basket companies? So traditionally, it used to be called the benchmark, but we don't call it the benchmarks because benchmark to us is a more of a reactive term. We call it a competitive index. That means that if you think there's a value addition over there, you should be able to compete it rather than using the tick box approach of complying with the metrics and sending the reports in the annual reports or the ESG reports. So focuses on the clarity in terms of understanding the purpose of the metrics, shifting focus from activity to the outcome. This is our, key philosophy to quantify the human capital investment in a way that you are able to see the measurable and quantifiable ROI of it. And by now there are standards and mechanisms to do it. Because traditionally, for example, if you look at the number of the training hours or number of the people engaged in the organization, why the investor would care about it? The investor would like to see that is there an improvement in the productivity, revenue per employee, or customer satisfaction, net promoter score, and at the end of the day, sustainability of the organization. So shifting focus from activity to outcome is one of our key philosophy, and using the data for that can make a better decision, using it for competitive purpose, not just for reactive benchmarking, and using these insights that you are in a better position to have a clear roadmap for your business that contributes to the sustainability. So S is a focus of our intervention. And in that regard, we are determined to help the organizations in terms of improving their transparency of the company strategy, operations, performance, with a view to build trust. Now, we're using this word trust. This is generic, used in a very generic way. But by now, there are empirical studies that organizations which are high on the trust index, and there's a mechanism to measure the trust, there's a sharp incline in the revenue of those organizations. Likewise, if you talk about the succession, the organization, I learned in a very credible, or through a credible source, that organization where the succession and readiness index is higher, at least above 75%, there's a sharp incline in the revenue. So the question is, there's an empirical evidence between the things that need to measure as an intangible item and how they correlate with the organization value creation. So going forward, our focus is to have this intervention for the organization around those 14 metrics to provide the numbers, ratios, and that would be based on the data that these organizations are willing to share with us, because we cannot create the benchmarks. We can go to the industry to look for the data in these 14 areas, like the gender pay ratio, the CO pay ratio. I don't want to get into the formulas part of it. This is self-explanatory. If somebody is interested, we can have the offline support available to you, but this is given in the SECP documents, and there's a supplementary material also available. We can provide whosoever needs it. So the compensation changes, employee turnover, temporary workers ratio, sexual harassment policies, anti-harassment policies, indeed, promotion by gender, likewise, occupational health and safety, child and forced labor policies, corporate social responsibility, training and succession planning, working conditions, human rights policies, gender-sensitive marketing policies. So as I said, the focus is not just on the measurement. The focus is to get the data, have it plotted, facilitate the organization in terms of those data sets, and then see and get from the outcome perspective, is there a payoff for the organization? So this is our focus. And we are keen to do it for the various sectors like the banking, construction, education, energy. I think hardly any uncatered for sector, and we would like to follow up with more information. Interesting thing is, I think this will be part of our conversation also, that we did an analysis that, for example, SCCP has published the one of the the ESG guideline. How does it go with the overall other regulations in the world? For example, you have the GRI framework. One of the most powerful framework at the moment is in the form of the ESRS, European Sustainability Reporting Standards. So we did a comparison, and we could figure out there are a lot of areas where the type of metrics in terms of the language and the description might be different, but there's an area is being addressed in a similar way. For example, health and safety, training and development, workforce diversity, human rights, working conditions, workforce availability. This has been addressed by SCCP also and the European regulations also. So I think this kind of approach can help the organization in using some framework with the help of which they can understand and satisfy the different stakeholders. For example, there's a company which is listed company in Pakistan, and they're providing goods and services to another company in the Europe. And by virtue of it, that they have to comply with the ESRS. If that is the condition, then this kind of approach, the common approach, can help them better. So I stop over here, and now I would like to, seek more wisdom from the group. We can start our conversation with our first speaker. In the meantime, while we're having conversation, it's a dialogue. Feel free to bounce your ideas. You can raise your hand electronically. If you have any question to a particular speaker, help us in directing the question so that the concerned person can answer. My first question over here, based on whatever I've said so far, is for Rizwan Harun Saab. Thank you so much, Rizwan, for being together. SCCP has published the guidelines. I would like you to let us know what's the way forward in terms of implementation, in terms of monitoring, performance evaluations, and particularly, how do you discriminate between the companies who do it more diligently and who don't care? Over to you.
Thank you. So first of all, thank you for enlightening the importance of this social aspect of the ESG factor. So as part of the ESG regulatory roadmap issued by the Commission in 2022, these guidelines were issued in 2024 on voluntarily basis, just to encourage companies to make more compliance with these guidelines. Initially, they were made voluntary, so that we will assess the readiness of the market, and then we will consider whether or not to make them mandatory. So considering the importance of this sustainability aspect, which is also referred as ESG, so we also made amendment in the Code of Corporate Governance regulations. So hereby the responsibility of the board has been enhanced to oversee the sustainability related risks and opportunities a company may be facing. So in the regulations, we also require companies to adopt these guidelines, which is although voluntary, but we do emphasize through the regulations as well that the companies are encouraged to adopt these guidelines. And on the sustainability aspect, recently we also launched recently an ESG Sustain portal, which require companies to provide information about the climate-related information. Companies can disclose on the E, S, and G aspect. So we have onboarded around 50 companies on the ESG Sustain portal, and we have received some around 25 responses on these aspects. So companies can report their success stories, companies can report their compliances on the portal, and the portal also act as a knowledge hub. There are some tutorials, webinars, videos are available, which can act as a capacity building for the company. So although the requirement is not mandatory in nature, but when you look at if a company is not complying with this, is not making compliance with these guidelines, or is not disclosing the metrics, so the aspect, this aspect may be considered by the customer, by its investor, by employee, whether it should associate himself or herself with the company, because ultimately if someone aware of this aspect may not be wanting to associate himself or herself with the company, and ultimately it will impact the company's value in the long run. So it is a new area in Pakistan, but this kind of awareness session will help us to go in the and follow the global practices. Thank you.
Excellent. Thank you so much for, I think, letting everyone know regarding the ESG Sustain portal. And I think you're right that at the end of the day, these are stakeholders who are basically interested in the accountabilities or the, of the companies which adapt to these guidelines for the reason that they so far have a status of the guidelines or not a mandatory requirement. Thank you so much. Very useful. So with this, I think I'll come back to, with more questions subsequently. So Shafaq, Shafaq, can I ask you, being a supporting arm to the regulator, you have a understanding of the macro aspect of the market as to what extent it's adapting to the framework, and particularly what facilitation and the support mechanism available by the PICG with regard to the ESG.
So thank you, Zaid. Thank you. Just to continue from what Rizwan was saying, now that reporting has become, mandatory for listed larger companies, and also the voluntary guidelines are there, now it's when the board members are asking how, right? So our focus in we have a number of capacity building programs, and we've been doing it for the past 4 years, but our 3 main programs are based on the how to set up the framework, how to develop your strategy, how to, integrate ESG within the company's overall framework and the whole supply chain. So in these programs, there are basically 2 of them are focused on the board. One is just an overall orientation, because even now some board members and executives are not understanding what ESG actually stands for. And so that's what we are focusing on. And then we have a more deep 2-day program, which is in collaboration with the IFC. And that focuses on materiality assessment, stakeholder engagement, and, the overall sort of reporting framework. And reporting is actually the end result, not, the process has to be in place. Everyone is jumping to reporting, but they don't realize that until they don't gather the right data, they don't have the right information in place, they won't be able to report properly in a structured manner. And I think these metrics are very helpful that SECP has come out with, because it provides a basic baseline on which what type of data they should gather. One of our more detailed deep dive capacity building programs is a 26-module online, a flexible sort of a program in which we have modules of 1.5 hours each on various E, S, and G topics. We have a number of collaborators for that. We've called experts in the various fields. 1/4 of them are based on the social indicators. And I even thank you to Zahid for running one of those modules as well. And we look forward to even adding on to these. So this is to provide deep dive information on specific topics, whether it's GHG emissions, materiality assessment, workplace well-being and productivity, human rights, so on and so forth, right? So we deep dive into that, and then providing them with the know-how as to how to practically also implement those respective requirements of the overall ESG framework.
Perfect. Thank you so much. So Shafaq, one more question that I would like to take right now, because this is in the same context. PIC deals with the board evaluations. Do you have started performing it on the ESG framework also, the board evaluations? Any feedback on that?
So the board is responsible for the oversight and monitoring. So in our own board evaluations for the past, I think, 3 years, we have been including a category on ESG and sustainability oversight, right? Iske alawa, we have developed an online tool, ESG integration assessment tool, which assesses the gaps in the system between the governance, risk management, metrics and targets, and strategy overall, that where do they stand right now and where do they need to be? So in terms of indicator-wise, Abhi, I think the reporting is not so mature yet in order to assess that. But at the moment, we're talking about more setting up the framework. So we're assessing that. Yeah.
Thanks a lot. Thank you. Okay. So my next question is, for Essen from KPMG. Essen, the thing is that you understand it better that interoperability of the ESG is a key issue, particularly when you have the different frameworks, like something coming from the United States, the European standards, somebody already using the GRI. Now that since 2018, there are ISO HR standards, and then there is a national regulatory framework. So is it making it more complicated? And there's a complication. So for an organization, how do what do you recommend to ensure interoperability so that in order to address different stakeholders or the different, you can say, different regulatory bodies or different associations, what approach they can use so that there's a their duplication or triplication of the work is reduced, and they use some unified approach in order to handle with the ESG disclosure requirement.
Thank you, Zahid, for inviting us. And I mean, it's an honor to be a part of this panel. To answer your question, you have had a slide on mapping local requirement versus ESRS, and that kind of similar exercises we have already done at a firm level, where we have to talk about these standards in the network, that how these are implemented, these social standards are getting implemented in Pakistan as well as in other countries. So good thing is that these standards, which originated in different silos by different NGOs or by different organizations and regulators in different jurisdictions, are now converging towards one single standards. You mentioned about ISO 30400, 30400. That is one of the most widely used standard in Pakistan, which is universally accepted as a benchmark and as a bare minimum requirement. Then there are organizations in Pakistan who are implementing M4E BSCI, and then SMETA as well, which is SEDEX trade related requirement from UK. So what is happening, and what is the good news, that all the basic principles in these different standards are very similar. Though the nomenclature can be different, the heading or the caption can be different, but the idea or the gist of those requirement is very similar. And if we actually in letter and in spirit follow the basic principles of these social compliance initiatives, then I think we can just index all those requirements as an annexure. And obviously if the main idea that Shafik also mentioned is about actually implementing rather than reporting. So much of the focus is on reporting, and these standards also talk about the reporting side of it. But the thing is that if we have to, report in a true sense, then we have to implement those standards, and the basic principles are very similar. And there is, lot of work still is in progress, where these, interoperability of the reporting for of these standards and the convergence of these standards is happening. So I think, but yes, challenges is there because, due to the fragmented global standards ongoing. But on the other side, we should acknowledge that the ongoing initiatives are improving alignment and reducing reporting burdens and enhancing transparency as well. So interoperability ultimately streamlines compliance, support comparability, and strengthen the whole sustainability reporting agenda for firms operating across diverse regimes and jurisdictions. So that is there, I guess.
Right. So if I may ask your personal opinion, do you think of any unified approach sometime in the longer run, like the kind of consensus you had on the IFRS or the GAAP in terms of the reporting structure? Because in current scenario, as you already mentioned, there are a lot of different fragments of the ESG. So what is your view regarding the way forward?
Yeah, so being a part of SRG of ISSB, Sustainability Resource Group, I can tell you that there is, I mean, in the upcoming agenda, lots of standards are, under discussion and are there. where convergence of these different requirement is happening. So I think that's what I'm telling you, that the basic principle for any kind of social compliance, which are there already by, I mean, I can refer you about for M4E BSCI principles, where basic principles are already there. So that kind of convergence is there. If somebody is actually implementing and is adhering those principles, then may it be IFRAG, may it be ESRS, may it be IFRS, whatever, all those will be and should be, if any organization should be compliant with all those standards if those basic principles are adhered to or complied with.
Super. Thank you so much. So as we are having this conversation at the, looking at the broader aspects, it's also important for us to look at some of the specific aspects. So like the requirement has already been spelled out by the regulators, and it's very, there's a lot of responsibility on the institutions which produce the professionals. We play a pivotal role in the organizations, and that I refer to the accountancy bodies, may it be ICAP or ACCA or the CIMA or the CFA Society, and even ICMA Pakistan as well. So my question to the Khurshid Kotwal from the ICAP is that how do you think ICAP is advancing? And I know it's quite progressive on the gender diversity and women empowerment. So what exactly is happening over there, and why it has chosen as a key agenda on the social aspect to advance the gender diversity?
Thank you,
Khurshid Kotwal.
thank you, Zahid, and good afternoon to everyone. An interesting discussion happening so far. And to answer your question, Zahid, yes, the accountancy profession in Pakistan and in some of the Asian countries is generally perceived to be a man's profession. So, whereas worldwide, the accountancy profession, about 60 to 70%, there are women in the accountancy profession. So, for example, when I joined to do my CA, I mean, there were hardly 1 or 2% women. Of course, now those ratios have improved tremendously, but a lot of work. So we realized that we needed to do a lot of work in this area. And now, obviously, because of the digitalization also, it becomes very easy to do things from work from home, and you can continue with your profession, especially, and this is especially important for women. So, for example, at ICAP, we have a very structured approach to this. So we have been, making it a priority agenda since 2001. And we have a formal structure in place since 2010, that we have a women's committee, which has an agenda, which sets an annual program of what programs need to be done. And a lot of work has been done. So, for example, on the women on board, I remember when SECP brought in the requirement of having women, at least one woman on the board, there was a hue and cry that there are not many women professionals in the industry, and we said that that is not a fact. There are lots of women accountants who are very suitable for for women to come on the board. So we made a criteria, and then we made a directory, and this directory is still being published, where people looking for women on board can go and find the right suitable. In fact, it also has achieves a dual purpose as well, because it helps you in your employability as well, because employers get ready access to a lot of women, with their skill sets and their knowledge and expertise, and they can select. So even employers look up this directory as well. And of course, with it, we've done a lot of training and capacity building programs also. And this becomes very important, especially for women who take a career break or, because of their family commitments, they are not able to work during a certain phase of their life. Now, the way the profession is going, you need to be very updated on things. You need to be in touch with things, because otherwise it becomes very difficult to get back. So we have training programs like the Women Entrepreneur Program, where we train women to be entrepreneurs or even work from home, do their own startup businesses, and where even the technical things are taught in terms of if somebody wants to do some sort of advisory work, etc. So these are some of the initiatives like that we take for women, to encourage them, to help them, handle. And of course, there are lots of mentoring sessions that we do, the guidelines we give. And what we also did was that we have made guidelines of what should be the guidelines for work practices at work for who have women employees. So, for example, in the past, there were no even basic things like toilets were shared, or there were no separate toilets for women, so we've set a standard for the industry that all those working with the ICAP, they should have some sort of a minimum benchmark or standard at their workplace to facilitate women to work, in terms of not only the infrastructure, but in terms of their policies to have an equal status for women in terms of their knowledge, in terms of their promotion, in terms of their pay structure, etc. And these are, of course, voluntary guidelines at the moment, but really well appreciated by the industry, because, of course, you'd find these things in the big companies or the multinationals, but really you would not find them, or find a lot of things that can be improved in the smaller or in the SME sector, so a lot of work has been done in that respect by doing research of what are the market best practices and then putting up together. And now we will be moving into a phase where we will be seeing how many people have voluntarily done this, and what sort of things are still required to be done. In addition, also a lot of training programs we run for the women, and these are at very nominal rates, or at most times even free, in terms of different aspects of the CA profession, whether it is on financial modeling or other technical skill sets. And the best part is now that we have also rolled out ICAP's best practices in the South Asian region as well. So, for example, our entrepreneur program was well received by the South Asian accounting bodies as well, and some of our good practices we shared. So, our Women's Day, which we celebrate, it has a lot more activity and bonding, for the women to come forward. And it's not just typical speeches. We do sports activities, and we do networking sessions, etc. as well. And even for our freshly qualified chartered accountant girls, we do this networking and mentoring session. We invite them, once they qualify, we celebrate with them their success, and then also give them mentoring sessions as well, so that they know what to expect in the future from the profession. And of course, then we also recognize women and showcase our high achievers or even our young chartered accountants who've done something great in the for the profession or in the industry or achieved some laurels. So we have the Lifetime Achievement Award, we have the Young Professionals Award, etc. And of course, again, we showcase it in terms of its diary. We even made a journey of the women as well in the accountancy professions, in the chartered accountancy. So there's a journey book as well, where the entire journey from the first woman chartered accountant till today is published for people to read and understand how we've progressed and what
Thank
sort
you.
of activities we've done.
Very nice. So I think the many stakeholders, all the institutions over here who strongly support this agenda of women empowerment and doing a tremendous work, including HR Metrics. We have a dedicated directory on the women leaders for board. So sometimes there's a key question by the stakeholders that what is the value creation in the companies? And I would like to come back to you again subsequently to know, and if you could refer to any of the strong, some case study, I mean, a localized environment or something that gives more confidence. We are sold on it that we cannot, as a country, we cannot afford to ignore 50% of our powerhouse. I'll come back to you subsequently. So with this, I would like to move to Asad Hamid Saab, CEO of the ACCA Pakistan. Asad, usually there's a knee-jerk reaction by the business whenever you come up, there's a new regulations, particularly for something that we are not accustomed to. So for example, there's a metric, CO pay ratio, right? Over there in the social aspect. What do you think? How does it contribute toward the organization value creation? How does it serve the purpose of the, you can say, transparency, objectivity, in a way that you drive the mission of the organization forward? So would you like to share some thoughts on it?
Yes, thank you much, Zahid. Once again, congratulations to you for organizing this session. I think the dialogue needs to continue because it helps create that awareness to start with, and then it moves on in a direction where you can advocate for the best practices, understand the best practices. The focal point that you've created in terms of today's conversation is the social aspect of the environmental social governance. So we all need to understand that, you see, it continues to be not a very simple agenda in the Pakistan context, simply because of the point that was initially made by one of the speakers, Shafak, I guess, in terms of the lack of a baseline data availability. So that's our starting point. You see, you've talked about the CEO pay ratio. So it's important to understand, is there a benchmark? What good looks like? What is the industry benchmark? What is the sectoral benchmark? How do we need to see it in a social context of Pakistan? How do we see it in the context of, you see, professionals itself? What background or what expertise that you're bringing to the organization? So at the end of the day, it's all about long-term sustainable value creation. And this is what, to me, or from an ACCA perspective, environmental social governance tends to achieve, not just for the organization, but for the society that we operate in, the economy that we contribute to, as well as the global, I would say, committee. Converging this back, you see, why are we talking about it? So it's all about around the race to achieving the United Nations Sustainable Development Goals. So we are talking about human development. We are talking about economic development. We are talking about social development. And all this, and in all this, there is a major contribution that is coming from the corporate sector as well as the businesses. So that is why today we are spotlighting, signposting this conversation. See, looking back at the 14 metrics that SCCP has come out with, to me, they are a starting point. And you see, CEO pay ratio is just one area within. I think what it does for organizations is to probably, you see, end up creating a culture which at the end is not just adding value to the shareholders, but also to the organization as a whole, the organizational culture, the organizational people well-being, in terms of you see harnessing the diversity that the social aspect brings to an organization. So I'd like to just the spotlight the CEO pay ratio more in terms of productivity. You see, it depicts on the organization culture. It creates that value or perception of the organization outside the organization. You see, it may be from an investor perspective, maybe from you see a rating perspective. So it depends. If you are a listed entity, if you're a non-listed entity, I'm sure that we are discussing today the ESG guidelines with specific on S in the context of listed organizations. So you see, while we zoom in on the CEO's pay ratio, it to us is more a depiction of the organizational culture. It is more a depiction of how the outsiders, your customers, your potential employees, your potential customers, your regulators, view the transparency and the fairness being demonstrated by the organization. So it's too early from a Pakistan perspective to maybe, you see, identify a particular benchmark from a CEO pay ratio. But yes, if logic or if I would say that common sense would drive us, it is all about ensuring that the organization from its very entrant level to its senior most level is seen to be rewarding and looking after its employees in a way that they're appreciating their diversity, they're appreciating their financial wellness and well-being, they're ensuring that the minimum living wage is being adhered to. Pakistan experienced an extraordinary circumstances in the last 3 years where we were unable to really benchmark as an employer or as an employee that what is a good compensation that is going to help mitigate not just the cost of living factor, but also the additional measures that may come in the form of fiscal measures being applied on individuals. So I'd just like to close on the fact that you see it's all about trust, but pay ratio to us is an important segment, but it's more around, I think, the point around process that Shafak mentioned. Reporting is the end. How do you get there? What is the framework that you're adhering? So from an ACCA perspective, I'm very pleased to share that our global council consists of 48 members, out of which 54% are women. Right now, we have 3 office bearers, our vice president, our deputy president, and president. All 3 are women. And it has happened for the first time in our 120-year history. And what's important is that for the first time ever, we have a Pakistani council member who's leading the council and association as the president. And last but not least, something I think it's important for us to understand, when you see West did not have the right to vote, we had developed our first member in 1909. So it is the framework. It is, you see, creating a culture which looks at the human capital as its most important capital. I'm sure that once we have these ESG guidelines voluntarily being implemented, and now with the SCCP coming up with this wonderful initiative of the environmental sustained governance ESG portal, we will have more data to capture on it. But the important part is that we gather information around the S part, not just from an organizational perspective. It is the value chain around that organization. It is the community that we are serving, and it is also the customers that we are serving. So I'd like to stop here. Thank you.
Excellent. Thank you so much. So if I summarize what you say, that at the end of the day, CEO pay ratio is not about dictating somebody what should be the pay, but it's that's the arrangement between the board and the CEO, but to understand the spread between the employee's salary and the CEO's salary for the reason that that's going to basically promote more transparency, and that should, avoid a kind of situation when you are in a position to make certain you can call the self-serving policies that where you can benefit yourself. And through this transparency mechanism, I think organization can overcome that instances of the, you can say the issues of the code of conduct. So that's the spirit behind it. Otherwise, it's always the choice of the board, whatever they want to pay to the CEOs. Okay. I think discussing some of the vital metrics like the employee I think in the ESG guidelines, the turnover, but I call it the retention of the employees, in a way that turnover always happens in the commercial organization, but at the end of the day, you organizations are keen to want to retain the vital talent and the high performers. So no one denies the linkages, the strategic linkages between the retention and the organization value creation cycle or the productivity. But I would like Aneeb, who is the senior manager of this, SEMA and American Institute of Certified Public Accountants, to give us some more granular information as how do you see these connections between the employee retention and the organization value creation cycle? Because with the help of this process, we should be able to internalize the metrics, because traditionally the social aspect is, I'm not saying, but the global research by an organization called there's a Paribas organization, they say that organization treat as more of a tick box because they're not able to see the significant financial and the non-financial value creation. So I would like you to help us in understanding this connection between the retention of the employees and the organization, sustainability. Aneeb, over to you.
Thank you very much, Zahid, and thank you for inviting me to this session. It's been really great education for me today. Coming to your point, I read a report many months ago. It's War of Talent. And I think that's where it all started. Retaining these employees in the post-COVID era. We've seen the rise of gig economy, where we've seen that the norm of the individuals, people are slightly moving away from committing themselves from a 9-to-5 job and committing themselves to do something, all their life, starting off something at an age of 22, 23, and then, retiring with the same work, line of work. However, this raises serious concerns for the employers, because if you have a higher attrition rate, there is a loss of tacit knowledge. That is the knowledge that your employees have for the organization. If there is lesser, if you're in for a short run, there is a lower level of commitment. So if you have a high retention, that means you have a higher level of commitment towards that purpose for which you have built that organization. So that's very important. At the association representing AICP and SEMA, we are a member of Great Place to Work, so which is also known as the Trust Index. So internally, we undertake the Great Place to Work survey to make sure that we are building that trust index, which is going to help us build our business, which is going to help us build our community. So I don't think that there is much I can talk about the benefits of retaining the employees. What are the big challenges? Because I'm pretty sure the business leaders in the room are already aware from the benefits of retaining a good employee. But if there are any specific questions that you want to direct, you may direct. I'll try to answer them from my experience. Like we all know, the cost of recruiting employees over and over again. We all know the undercommitment you can have if there is a short retention amongst the staff. So it's not something that I want to go over.
Perfect. Thank you so much. I think it's quite useful, your response, and we'd like to come back to you again. My next question is towards Sarvat. Thank you, Sarvat, for your patience. And Ms. Khurshid, I'd like to come back to you after having completed the first round, and I'm happy to take any question or comment, whatever you have. Sarvat, one of the metrics is the succession and the training and succession metrics in the ESG context, right? There are different perspectives. I think at some point of time, I think the CFO or maybe somebody else of one of the told the CEO that what if we train people and they leave the company? But the CEO said that what if we do not train the people and they still in the company, they stay in the company. So there are both sides of looking into it. So Sarwat, how do you see this metric in terms of creating resilience, in terms of creating sustainability for the organizations? Over to you, Sarwat.
Thank you, Zahid sir. First of all, I'd like to thank you for inviting us, and of course, we're having this dialogue at a time which is, there's a lot of local issues and global mayhem, and it's good not to lose sight of the S metric, which seems to take the back seat at times. So, just to introduce, CFA Society Pakistan is very focused on advocacy, awareness, and education. So when you talk about training, that is something very close to what we do at CFA Society as well as CFA Institute. So CFA Society is a locally incorporated NPO, and CFA Institute USA, we are a member society of CFA Institute, which is present in 160 societies across the world in 80 countries. So while we are very locally focused, CFA Institute is very global. As far as I think earlier also, as Madam Khurshid also mentioned, that in a lot of other professions, like let's say doctors, just find a lot more women there, but in the finance professions, there's women are less represented. And while I'll come to the metrics later, but the fact that we need to train more people to be there, we're at CFA Society Pakistan, we are really making an effort. We try to offer them scholarships because the young charter, the young population or the young women who are coming in usually find it difficult. CFA Institute also offers scholarships to women. So we make an effort to train people to be part of that cohort where they can be part of the system. Having said that, CFA Institute has its own DEI code. And CFA Institute, being very global, tends to localize things for different markets. So right now, their DEI code has been tweaked for USA and Canada. They have a separate one for Europe. They have a separate one for Singapore. And there's a lot that we can derive out of it for our own implementation, as has been mentioned earlier. So there is an implementation guide available, and then of course there's a reporting mechanism also present, which we can, perhaps, as somebody said, we can have a more cohesive effort. So while coming back to your question on training, so we have an ESG certificate in investing, which has now been renamed. Just as of today, they've renamed it as Sustainable Investing Certificate. And that certificate is the most popular certification globally and within the investment management community. And it does cover a lot of things, including, social factors and a lot of social factors related to human capital development, employment standards, health and safety, legal issues, access to communications, finance, health, and of course, analyzing those risk assessments and making those risk assessments to be part of the financial modeling. So that's one significant contribution in terms of training that exists. So yeah, I hope I answered your question.
Yeah, perfect. Thanks for your effective role modeling, in terms of implementation of this metric within the CFA Society. Okay, so before we have a second round of questions, I think what should be a last round, I would like to come back to Ms. Khurshid Kotwal, who wants to say something with regard to the employee retention. I think you want to add on something, Ms. Khurshid?
Yes, Zahid, thank you. I think this is a very important KPI, for corporates and for the external readers to see also, because it's going to tell you, the inside story of the company. So, for example, at Unilever, where I worked and I was the corporate finance director at Unilever, this was one of the KPIs to judge the performance and give bonuses or the performance of the company. So it was not just about sales and profits. It was also about such things as well, where a 360 feedback was also taken, so that your Subordinates also gave a feedback of how you were performing because really, or how you were behaving with them. And this actually then defines the culture of an organization like. So this is very important for companies to focus on, and and if work needs to be done, then even consider it as a KPI as well for bonus performance as well, because this will change the culture of the organization.
Absolutely. I think you've nailed it very successfully. And I'm aware of an organization even in Pakistan that where 15% of the performance appraisal weightage is assigned to the retention of the team members. So I think it has a clear linkages. Thank you so much for demonstrating it. Okay, it's coming back to our the speakers in the next round. Rizwan Saab, I would like you to let us know the way forward, because I think there's nothing static in this world. The things keep on evolving. So, I would like to understand what is the vision of the SCCP in terms of refinement of the guidelines, if there's something in the near future, or is there any possibility of getting into the mandatory aspect of the ESG, disclosure. So I know it's not a commitment from your side to give us the futuristic view, but you have the freedom to give us certain future insight. So over to you.
Thank you, sir, once again. So, sir, as far as the alignment of this guideline is concerned, it is important to note that we already mentioned in the guidelines that the companies are encouraged to take assistance from the globally recognized framework like GRI, Global Reporting Initiative, and ISSB issued standard, which is International Sustainability Standards Board, that have issued two standards. And it is pertinent to mention here that here in Pakistan, after the issuance of this guideline in 2024, on the 31st December 2024, we also adopted these two standards, IFRS S1 and S2. S1 is about general requirement regarding climate, general requirement of sustainability-related risk and opportunities, whereas S2 requires disclosure of climate-related data. So we have adopted these two standards here in Pakistan in a phased manner, which will be applicable on listed companies based on their size in terms of assets, revenue, and number of employees. The first phase will be starting applicable from July 1st, 2025, and second and third phases will be applicable from 2026 and 2027. And in the third phase, the standards will also be applicable on unlisted licensed entities. So it is not just like it will be only be applicable on listed companies. So it is also relevant to have the other PICs which are in the unlisted structure, like Mudarbas, NBFCs, and insurance companies. So in the third phase, the standard will also be applicable on such entities. And it is important to mention here that to add the credibility on the reporting, so there will be a requirement of getting the reporting assurance from the auditor from the second year of reporting whenever the these standards become applicable on the company based on the phases and thresholds of the company. It is important to mention, like, it is not just like we have IFRS S1 and S2, that after the adoption of these standards, there will just be a disclosure about the climate. That is not the case. Although there is just one sustainability standard S2 in the market or issued by the ISSB, but the standard S1 itself require the companies to consider the guidance provided by the GRI, Global Reporting Initiative Standards, European Sustainability Standards, SASB Standards, Sustainability Accounting Standard Board. So ultimately, it is not like you will just be providing disclosure about the climate. After the adoption of S1 and S2, you will have to provide the disclosure about the social aspect as well. So you will have to disclose about the injury, the ratios that you were talking about, like, and you were also mapping them in one of the slides. So you will have to have this disclosure as well in future. It is not just like, okay, we have a mandatory requirement of S1 and S2, so there will be no requirement of other aspects. It will be there. You have to consider the social aspects despite after S1 and S2. So we believe that with the adoption of these standards, ISSB standards, and with the adoption of these ESG guidelines, it is considered that we will be having an ESG index on the exchange in Pakistan. I think. Thank you.
Very insightful. Thank you so much for giving us a clear vision. I'm sure everybody is benefiting from the way forward. Thank you so much. So, Ahsan, if I may ask, while on one hand the regulators are asking for it, the standard setted bodies are asking for the additional information, they are promoting the standards, having the capability within the audit firms to look at the data and give assurance on the quality of data, because the third party would always like to rely on the reports which are duly audited. So give us some insight regarding that capability and particularly the quality, integrity of the information that comes to you, and how do you manage it? Like to have your thoughts on that.
Thank you, Zahid, for asking this question. And my feel is that actually there is not much awareness regarding the social audit at large. Actually, since 2007, I've been associated with KPMG and have been in these, back then we were calling it sustainability. Now, then it got the name of impact, and then now we have ESG. So social audit was always there. And you have heard about, M4E BSCI, and then there is, as I mentioned earlier as well, there is another, SMETA, we call it SMETA, that's SEDEX members ethical trade audit. So that kind of, practices were there. IKEA 1.5 ways was always there. These all, international organizations have been focusing on the social audit, and for that we have to be accredited. So all I can say, these organizations like who are capable of providing these kind of assurance have been accredited by these international organizations. I myself, I'm a chartered social auditor, so that kind of certifications are already there. There is a whole team there, and I can vouch for other chartered accountant firms that these organizations do have the capability to perform these social audits. And one more thing about the the positive side of ESG guidelines, I just got that just got clicked when Rizwan was mentioning about the future vision. So the underlying principle or the inspiration that we have in ESG disclosure guideline is WAF, World Economic Forum's stakeholder pledge. Those core metrics are actually the basis of all these ESG guidelines. So we are not and reinventing the wheel, or the even local jurisdictional requirement that are coming from SECP on pay gap, or from various directives and circulars as well on gender diversity, and then no discrimination related, child labor and forced labor related, requirements. Those are not very new. Those are the requirements that have been discussed, and that there in these organizations, mainly who are related with the international world, either by the export or they have a parent company from abroad. So those are the organizations who have already that kind of social management system very well deployed and implemented, and their parent organization asks for, or in these cases, in much of the textile cases, these food business, agriculture related business, these organizations ask for a special audit which is actually relating to the social audit. So I think from my point of view, yes, the challenge is there. We can always discuss about the quality of data, the quality of disclosures, the data backing those disclosures. That is debatable. That and that's the problem of across the world. Nobody is claiming that they have a very fine system available, and that's why we have a need of audit and assurances, and to gauge the claims, and to the assertions made by the management. So in order to verify those, that is debatable. We have to be very vigilant and skeptic about it, and that's that's very fine with whatever we are doing for the statutory audit when it comes to numbers. So I think the approach is there, the methodologies are there. Capability and capacity is already there. even on the corporate side, I will say much of these systems are very well placed. The social management system and even the cascade effect of those social management system is already there. The thing is, we are very bad at promotion and marketing. So unlike our neighboring countries, we don't do good marketing and do good. We do a lot of work, but we don't do good marketing. So thing is that Pakistan is not very far behind than other countries. It's very much in the line, and our corporates are very much prepared, and even more than prepared. They are already reporting on these social metrics and principles. The thing is that we have to be very more, we have to organize our thoughts, and we have to structure it in a better way. For example, I mentioned about the international standards. Maybe our regulators can ask them to start reporting on those aspects. But if that is not there, even these ESG guidelines, metrics, S metrics, 14 metrics are more than enough. Why? Because these get mapped across all those internationally acknowledged and accepted standards like M4E BSCI, this SEDEX related, and then ISO 30400 that you already been doing for long now. So I think that is the whole idea about implementing, and the readiness and the awareness is there. But yes, to ensure that data quality and integrity are upheld during reporting, it is imperative to focus on articulating clear, transparent objectives for data collection and disclosure, implementing standardized and uniform mechanisms to ensure data is consolidated and reported in a connected and very well holistic manner, utilizing reliable sources of data, and then engaging a wide range and cross section of the stakeholders is a must. So that's I think that's the real challenge that has to be addressed: the quality of data, but and the restructured approach, and then more of better marketing and promotion. That what we are currently doing, I guess.
I completely echo your statement that we need to be a good communicator. And I think we must complement the efforts of our Security Exchange Commission, because it is playing a pivotal role. It's playing a very proactive role in the region, I would say, so that keeping it the pace with the global regulations and constantly modifying itself, and also the way they engage the stakeholders in that regulation formation process. You have complained about the how we do not market ourselves. So I would take this as an opportunity. You referred to 30414, right? This is the extra 30414 standard, which is called the 58 metrics, and with a clear classification for small, medium, large organization. And the beauty is, since I'm one of the author of the standard, that it has got the clear descriptors, clear definitions, clear formulas, what is included, what is not included. That is the reason that by now, at least 22 countries in the world, predominantly in Japan, but then spread within the Middle East and the Europe also, they've got certified on this. Fortunately, I see 2 countries in the Tokyo that we certified in collaboration with our partners, and we did, I think, 1,000+ professionals all over the world, and we are the one who have certified highest number in the world so far in this standard. So that's a good news. And coming, taking the discussion forward, I would like to say, I think, Shafak, very quickly, if you can tell us, because you are having a close contact with the boards through your various interventions, what is the mood of the market? How it is evolving? Are they really keen to adopt these standards? Is there an appetite for it? I think, and if you can share some thoughts on that.
So we've been trying for 3-4 years now with the training, and the shift has obviously come now that the regulator is demanding it. Whether it be SECP, whether it be State Bank, they are now requiring reporting on this, and that's why everyone has woken up. Again, they're all focused on the reporting and not realizing the system has to be in place. And like you said, the Chief Sustainability Officer, well, I think there will be very few. I think 80% or 85% of the companies, they are just allocating the task to an existing employee, right? And that existing employee has been told, okay, find out what this is and do it, right?
Okay.
And so it's generally the company secretary, HR professional, or the risk officer. And so it's understanding stage right now, but I think interest has been developed now because they know that they have no choice.
Great. So we are in that direction. Thank you so much. It's quite encouraging. Okay. Let's take a moment to seek some, reflection from our participants. Anything that they wish to say, because I have one more short question from all the accountants, and then you would like to conclude. So is there anyone from the participants who want to have any quick perspective, any question or a comment that you want to divert to the speakers, or you want to say it yourself? You can raise your hand if you wish. Okay, so I believe you're comfortable with it. My question to all the,
Hi,
representatives.
Assalamualaikum,
Please.
Zaid. This is
Go ahead.
Rabia from Jazz. Yeah.
Yeah.
My question is good. I was looking at this ISO standard, which you were the architect of. It has a lot of internal elements in there. And I wasn't able to really, maybe it was a quick look, I wasn't really able to look at the external aspects. Because ESG also looks at the external aspect, but I just thought that how much does it cover the external aspects of?
Right. So, Rabia, one of the, it basically addresses the, most part of the ESG, not every component, because as ESG, the requirement from the various quarters, like, the accountancy bodies, the GRI, ESRS, but it covers, I think, the most part, but not every component, number one. Secondly, it was developed in 2018, so it doesn't take into account the post-COVID situation, like the mental health and well-being, the digitization aspects, which has become more pronounced. So by now, in another 10 to 15 weeks, it is expected that ISO is going to release another version, which is called the version 2. But by and large, so far, this is the only globally consensus-based framework. Why consensus-based? That ISO is in association of 165 countries, and they have ratification. So this is the only consensus-based document which provides a clear mechanism to disclose the human capital, and that's the reason it's being considered as one of the authentic framework for using it. But as I said, it doesn't serve every component of each legislation. And we can have more offline conversation around this if you wish, right? I hope it answers your question.
Yes, it does. Thank you so much.
Okay, great. I'll be happy to have further conversation. Okay, any other question, comment by the participant? If not, Yusuf Saab, we can't hear you. I'm muting yourself. Thank you. Right. So my question to all the 4 accountancy firms, that what do you think is the way forward of building capabilities of the people in terms of building capabilities of your people? Because I know that the accountants, they are at the helm of affairs, right? They are part of the key decision framework. So how do you building their capabilities, and what your own organization is, chasing in terms of the particular aspect of the ESG? I know the time is quite short. We have like 10 minutes. So if you could wrap up your response in 1 to 2 minutes, we'll be able to conclude on time. Thank you. So first of all, let's take the comments by Asad, and then we go to others.
Yes, thank you much, Zaid. So the capacity and capability, you see, starts with awareness. So firstly, understanding from an organizational perspective, what does it mean for us? What does it mean in terms of the compliances? So we have talked about voluntary regulations. So that has to be the starting point. Secondly, I think the important point is what we generally miss out on is how it impacts the organization. So there is a brand aspect. You talked about the public trust or the trust element, but to me, it's about the organizational productivity. So if you can create a business case and pick this up as a means to being an organization which has an inclusive, sustainable, long-term growth roadmap, so that would help people understand the areas that need to be looked at. You see, something that we have heard in terms of various conversations with the industry is that it is not just a focus on S, it has to be an integrated focus on ESG. So when we talk about the ESG mainstreaming, the S element has to be looked in the context of the overall plan framework that is measurable and trackable. And last but not the least, you see, once you're able to understand as an organization, create that culture, create that diverse group of thinking, create that plan, so you are able to then see and measure the progress against it. So the first important element is awareness. Second is to be able to understand the impact that it has on you, your business. Third would be, you see, how do you create that plan and how you're able to track and progress it. It's not going to be overnight. There is this concept of just transition where we have to be mindful that it is not an overnight switch that is on or switched on or is switched off. It has to be in a way that it is transparent, it is fair to the organization, to the workforce, that eventually not just complements the organization's productivity and long-term value creation, but also to its key stakeholders, including the shareholders. Thank you.
Very rightly said. Thank you. Because what I witnessed that traditionally we consider the cost in financial terms, but the benefit in the soft intangible terms. That's the biggest, I think, disadvantage. Unless we talk in the financial tangible ROI terms, and that's doable, because the standard 30414 clearly provides a mechanism where you can demonstrate that X amount of investment in a particular human capital corresponds to how much dollar return. There's a declared framework, and I think that's the best way to make a business case. Otherwise, in the absence of a proper measurable business case, it's all subjective statements and the narratives, and it's hard to convince the board members or the financial decision makers without using the numbers. Thank you so much for emphasizing it. Ms. Khurshid, I think we have two more people raising their hand. Let's take it one by one. Khurshid, over to you. Then I come to Aneeb, and subsequently Tariq Sahib, I'll come back to you. Thank you. So,
Yes,
Ms. Khurshid Kotwal.
Yes, thank you, Zahid. Yeah, you see, till it doesn't become a business or a commercial case, organizations are going to be very hesitant to adopt the ESG rules and the ESG regulations or look at the social bit. So it has to be a dual thing as well, or a lot of thought is also required to be put into it. The important thing is also actually, you see, the gathering of the data is very important, which we haven't really, touched upon too much in this conversation, because at this moment, organizations are not equipped to actually generate the data or build that data, etc. And of course, when you build something from scratch, often the data is garbage, and you need to actually know how to handle vast amounts of data. Again, of course, there are internationally, because we sit in international forums, and we know the best practices of how carbon emission, etc., are captured by others, etc., globally. These are important factors to also understand and learn. So, for example, at the Chartered Accountants Worldwide, which is a forum of 19 countries around the world, including from England, Australia, Ireland, we share the best practices to understand where some of these developed countries are going towards, or what they have been doing. So investment will be required, and typically for Pakistan also, to be on a sustainable level, a huge amount of investment is required. So same thing for the organizations. That is why people will try and just ensure the tick in the box for the local compliance. So we actually, as professionals, really also need to evaluate and see how is it going to help the business. This is very important as well, and whether there is an ROI coming out of it or not. And often I tell you, the ROI comes out if you have the right data and the right amount of knowledge that you've selected the right product. Again, I'll go back to my experience at Unilever that, when I was working at the factories, one of the things we were debating amongst ourselves was, should we put in an effluent plant or not? I mean, I'm talking about, several years ago. And at that time, whether it was a very expensive plant to be put up, and obviously because of all the waste and it was causing. So clearly we had to really do a lot of work, find out where the most efficient effluent plants were, which were not very, very expensive as well, and which would serve our purpose. So this is a lot of hard work and means a lot of data gathering, etc. And companies should go into that process of not just blindly doing something, but evaluating properly the pros and the cons and then moving forward.
You're right. You're right. I would say it in a way that it's not just the business case at the cost of the social aspect, and not just the social aspect at the cost of the business. Because at the end of the day, if you are serving in a commercial organization, you are using the money of the shareholders. And you're even the brand positioning, like you see in the United States, the company Tesla, which was among the top companies, with one odd thing that took place on account of just the action of the CEO, and it's gotten to hundreds of the scores down in the stock market. So it's a brand positioning, and it's also a departure from the traditional concept, which is previously a shareholder capitalism, to a stakeholder capitalism. So many people think that stakeholder capitalism is at the cost of the shareholder capitalism. That's not the thing. I think we can have a subsequent round of conversation. If you look at the companies in the Fortune companies, the companies which are high on the stakeholder capitalism or high on the shareholder capitalism also. So we can have a further conversation. Thank you so much for your perspective. I would like to come back to Tariq Saab. You can have your short perspective, then I'll request Aneeb and Sarwat, and then we can conclude. So your perspective is very important. One thing I want to add on, I was having a webinar with Ms. Khurshid with the CEO of the Unilever, Amar Parachar. And he frequently promotes the concept of the living wages beyond the minimum wages, right? So I asked him explicitly, how does it really serve the value creation in the organization? Because at the end of the day, you are asking for more cost. And he demonstrated with the help of facts and figures, by increasing the amount of living wages, they were able to reduce the overall operating expense on account of the turnover and the attrition. So indirectly, he proved, not indirectly, directly, he proved that with a more investment in terms of cost, they were able to, have a better ROI and higher financial performance for the organization. So in a very, I would say, more strategic way, you are able to manage the cost, but it's not the upfront mechanism of reducing the cost, because indirectly, people stay in the organization, they serve the customer better, you have a better repeat customers, your defects rates reduce, your the value creation cycle improves, and indirect then at the end of the day is a better financial value creation. So that's the overall,
absolutely,
I think.
Absolutely, yeah.
Right. Thank you. Okay, so Tariq Saab, any thoughts you want to share? I'm sorry, the time is over. I think we'd like to conclude in next 2 to 3 minutes. So Tariq Saab, over to you.
Zaid Saab, thank you very much for bringing in people from different perspectives and come in and bring them to the round table. I just want to share with you that I was the ISO committee member in the development of the IWA 48 framework. Right. And that framework pertains to ESG principles, how to implement it. And it provides very comprehensive examples and guidelines for the development of the strategies for any company. So I just wanted to share with you, it has already been issued in December. It is readily available, free of cost. So all the companies, they can benefit from that. Incidentally, I had met a director from SCCP, and I had told her as well, but somehow they did not know anything about it. So if SCCP can also go through it and try to get benefit from the contents there in the IWA, it's not a standard as such. IWA only stays for 6 years. Thereafter, either it is withdrawn or it is converted into a standard. So ACCA, in addition to the IFRS, because the GRI and also the ISSP, also their partners are also were in the IWA. So since it is an international workshop agreement, so we should all be taking benefit out of it. Thank you so much.
Wonderful. Thanks for the adding to the knowledge. I would look forward to understand it better. Feel free to, share with me and in whatever way it's possible with us to propagate it. Happy to do so. Thanks once again. So, okay, second last, Ms. Sarwat, would you like to have any thoughts on, the question remained the same, value creation by the CFA Society on the ESG framework, once you already highlighted in terms of the training and the aspect, but any other thing you want to mention?
I wanted to add that, the discussion, what Madam Khurshid was also leading and Asad also mentioned, that, ESG or sustainability is long-term. So when you start looking at profitability and short-term, then obviously that balance may not always be. So ESG or sustainability has to be part of the long-term strategy. And that's how we look at it. And that's how we recommend things are incorporated and as I said, also initially said, all of these SCCP guidelines are just the first step. I mean, there's a long way to go in terms of where we want to reach on the climate front or issues or on the social front and which goes beyond gender diversity as well. So we at CSRD obviously believe that these are long-term values, and in terms of the investment management profession, we continue to encourage companies and organizations to work towards those goals. So yeah, that's my take. Thank you.
Brilliant. Thank you so much. Aneeb, anything from your side?
Yeah, I just wanted to comment on a couple of things. I want this room to treat ESG as an opportunity, as not as a compliance or something as a cost or threat. I think what Ms. Khurshid has mentioned about Unilever, I think it will be a very good case study for the room if they look at the Unilever Sustainability Living Program that they initiated in 2010 and see that as a case study, how that improved the profitability and revenues for Unilever over the past decade. I also want to touch on that fact, Zahid, that you mentioned, that who's going to take the responsibility of being the chief sustainability officer. And I think that culture needs to be driven across the organization, and that somebody from the top needs to take that position. It's not the role of an accountant or of a marketeer or of a salesperson. It's a culture, it's a value-driven culture that needs to be instilled amongst all the employees in the organization. And if it's a value-driven, it's a purpose-driven organization, it has to have that ESG, printed all over it. Because ESG is about doing the right thing the right way, in simpler words. That's all I want to say. Thanks.
Fantastic. Thank you so much. I think feel like having more conversation is quite interesting, exciting, and we would like to continue the dialogue. It was just a starting point, and I look forward to, this opportunity, to avail this opportunity with any one of the, members of this panel. If you want to have some focused conversation, we can always help you in mobilizing the people who may be interested in this dialogue and take it forward. At the end of the day, it's a collective journey. We have certain vision in mind, and that vision is to help the industry on account of the data supply, so that you have certain reference point to see where an organization stands within the sector or outside the sector, and what's reflection they can get in order to see how they perform on the ESG aspect. So that would be our contribution, hopefully, and we would like to get back to the organization in terms of who all wants to be part of the journey. So the journey is on. Thank you once again, and there's nothing else from your side. We can conclude session once again. I'm thankful to Rizwan, Shafak, Ahsan, Ms. Khurshid, Asad, Amit, Sarwat, Aneeb, and also my colleague Isha. for organizing this wonderful session. All the best. Take care of yourself. We'll be sending the recording to each one of you.